Merck announced their earnings today, and I wanted to go through their earnings and then quickly value the company to see if this is a stock that I should be interested in. I currently don't own any Merck stock, but I've known of this company for a long time. Who hasn't? They've been a real well known company for a long time. Now, let's take a look at their earnings. They look at their fundamentals and see if this stock presents an opportunity, a discounted stock, or maybe if it's priced fairly, or maybe it's overpriced and we expect that it might go down in the future. Let's take a closer look. Merck is a $323 billion company. That's a pretty big market cap. And part of the reason for that is over the last 5 years, the stock's done quite well. It's risen from about $70, $75 a share up to $127 a share. And likely it's because they've done well from a business. They've grown their revenues and so forth. So they probably deserve that. Their forward PE is 14, but in the current year, it's quite high at 141. They pay a dividend, and I'm sure income investors like that dividend. Analysts like the stock, and they believe that it's discounted by a little bit. Now, earnings were announced, and the stock is down 3.6%. Interesting. When we look at their revenue, the revenue historically has been good. They've grown their revenue over the last 4 years, although 2023 was a little bit slow. If we look at the quarterly, revenue is good. So the revenue has been growing nicely, which is good to see. A company that grows their revenue at this rate, I consider this a good revenue company. And you see that in 22, they had really good revenue. It really did dip. Maybe they sold forward in 23. When we look at their free cash flow, most pharmaceutical companies produce really good free cash flow, and Merck really does as well. They have historically produced really good free cash flow. And in the most recent full year, they produced $9.1 billion. I'm going to use about a $10 billion rate of cash flow so I can get a quick value for the company. When I look at Merck's revenue, it looks pretty good. The company increased their revenues by 7%, which is very good in the second quarter for their business. Overall, positive earnings per share, and the company really operated well. Their full year guidance, they raised their guidance, which is very good on their top line revenue. And they expect earnings per share had a decrease to it. So maybe that's what's causing the price decrease for their stock. So they had to set an expectation that they're going to have a negative impact from a one-time charge of approximately $1.3 billion. So that might be the reason why the stock's selling off a little bit. But again, sales did grow, which is always a good barometer of the health of the business. If you're growing your revenue, that means customers like your products, you're getting more customers, you're increasing your price. All those things are good. In general, I think their earnings were good, but as you saw from the stock price, it's been going up. So I think investors expected more, and they've been paying a premium for the stock potentially, and they expected more. So that's maybe why it's selling off a bit. How desirable is Merck as a business? Well, I like to put companies in the desirability quadrants that I've put together. The green representing companies with the strongest moats and the ability to operate almost like a monopoly, setting their own prices, really getting more demand than they can probably fill. And they're probably the most profitable companies operating out there. And then there's the worst companies in the red, which are in industries where there's just too much competition. Those competitors are constantly slashing prices, getting rid of profits, and seldom do those companies generate really good free cash flows. Merck is a pharmaceutical company, and there's a lot of desirable aspects to a pharmaceutical company. Although I'm not going to put them squarely in the green, I'm going to put them straddling the green and the gray. Gray being that there is a moat, it is strong, but Merck does have competitors. In a few drug franchises that they have, they are the sole company that provides that drug. But in many other categories, they compete in the marketplace, and that tends to drive down price and profit. So it's a really desirable company, but not the most desirable company that I see out there. Now, I don't currently own Merck, nor have I done deep analysis on it, but I like to do a quick qualifier calculation to see if I would really want to dig into this company and invest my valuable time. And I have a quick valuation calculation metric where if a company has no revenue, I have a multiplier against their free cash flow, modest, good, and high. And I think that Merck has good revenue. They've been growing nicely. They have good, consistent growth. So I'm going to take their current annual free cash flow, and I'm going to use about a $10 billion figure, multiply it times 20. I get a $20 billion value for a company like that. But their current market cap is $323 billion. So I think just very quick calculation, The stock seems to be overpriced, and I probably won't invest more of my time because I'm looking for stocks that look great and present a value proposition to me where I think the stock's going to go up over time. So this one doesn't qualify, and I'll stop my analysis at this point. Merck is a high quality company, but it's not discounted. It doesn't provide a great investment option for me. So I'm going to just pass on this company and let other investors own this stock. There's a lot of choices in the market. It's not like I have to buy a specific stock to make lots of money. I have great choices out there, and I'm looking for choices where I could buy a stock and really make good money. In this case here, again, Merck is a great company, a great business, but the price is a little high, and I'm going to go ahead and pass. I hope you found my video interesting, and I appreciate you watching.